It's a view from the floor here at the New York Stock Exchange, and I'm joined by a very special guest now. We have Kelly Kowalski, Head of Investment Strategy at MassMutual. It's great to have you, Kelly. And fresh off the press here, we've got the latest Fed announcement with rates holding steady. How should investors view this?
Thanks for having me so much, Michelle. Well, coming in today's meeting, investors were really expecting the Fed to be on hold. That's what happened. But what was important was the forward guidance. What are we expecting for the remainder of the year, especially given the shocks that we've had? And the Fed kept one cut penciled in for the year, but they also revised up their growth outlook, and they kept, their unemployment forecast steady, which signals some confidence in the economy. However, when we got to the press conference, Chair Powell sounded a little bit hawkish. Bonds sold off, and he made it sound as if the bar is going to be relatively high for that next cut. He said they need to see progress on inflation, and markets are kind of settling into that a little bit.
After seeing what's happened in the first quarter, how do you view the backdrop of growth and markets compared to the start of the year?
Well, we came into the year with a relatively constructive outlook. The economy was on fairly solid, economic growth footing. We have the impacts from the One Big Beautiful Bill. That means tax refunds for consumers. That means corporate tax breaks for corporations and companies. We still have that, but now it's being, sterilized a little bit by this shock that we have from higher oil prices and the uncertainty. We also came into the year expecting around 50 basis points of rate cuts. Now that's looking like one or less. So it's getting a little bit more complicated. We still think the fundamental outlook is there. Earnings still look like they're going to hold up, but definitely not as sure as we were starting the year.
What is your perspective on Treasury yields with the rest of the year looking ahead?
Well, at MassMutual, we take a really long-term view on all things, including interest rates. We tend to look at sort of credit risk versus interest rate risk. Having said that, I think just the nature of what we've seen from the beginning of the year to now shows you how quickly forecasts can change and how, single events can have an impact. So right now, it looks like the trend is upward, right? If you've got positive growth and you've got that holding up, plus you've got some inflation pressures, that could lead to higher yields. And that could be a challenge for equity markets. We know that higher interest rates can pressure multiples. Equities can still move higher, but it could be a headwind.
What would you say are some of the investment themes that are shaping portfolios in 2026?
Well, first, I've got to start off with geopolitics. I really hope that Iran is sort of the last shock for investors of this year, but it probably won't be. So we'll continue to see policy and geopolitics playing a role in, daily movements and, how it's sort of impacting the medium to long-term view. One of the other themes is the AI. AI capital spending is a huge driver of economic growth right now. We're seeing it in debt markets where, companies are issuing a lot of debt. Amazon just issued quite a bit last week, and it was, digested well by investors because they like, taking risk with a high quality company like Amazon. On the other side of the AI, you've got the investment. We're also going to see fears around obsolescence and how is this going to change certain companies' business models. So we've already had what we call the SaaS apocalypse, and we expect to continue to see that sort of filter through as investors revisit companies' business models and what the landscape is going to look like from that perspective.
You mentioned geopolitics and the uncertainty. So how should investors navigate this time period right now?
So it really comes back to the fundamental earnings growth story. And I think if you look back over the past few years, what we've seen is that the reason markets have been able to move higher in spite of shock after shock is that earnings have remained intact. And we've actually haven't seen yet a downward revision to earnings. If you look at earnings, they've actually moved higher a bit over the past few weeks, which is very surprising. So we really have to focus on the fundamental impact to what's happening in geopolitics, what's happening, elsewhere. How is that impacting companies' bottom line? We have sort of mid-teens growth expected for the S&P 500 for this year. If that holds in, that's a really strong support for risk assets.
Kelly, thank you so much for joining here at the New York Stock Exchange.
Thank you.
And that'll do it for us here. I'm Michelle Yu. Thanks so much for watching, and we'll see you next time.